Hi, everybody. Thank you for joining me live today. My name is May Duldalau, and my blog is yesfinanciallyfree.com. Today, we're talking about how to set exit strategies for stock trading from Fidelity. So the information from today I got from Fidelity website, and you can learn more at my blog, yesfinanciallyfree.com. If you are not on the email list, go to yesfinanciallyfree.com right now, put in your first name, email address, hit the big red yes button, and you're going to get a free ebook, Working Parents Guide to Financial Freedom, sent directly to your inbox. And you'll get emails on when I'll be live and what I'll be talking about. So you can tune in if you're excited. And I do answer questions on my lives. So you're always welcome to ask. So a little bit about myself. My name's May Duldalau. I live in Waikiki, Honolulu, Hawaii, with my 7-year-old son, Jordan, my husband, Jamal. We own this condo. We own another one down the road, which is an Airbnb business. And I've been going to the beach every day for the past 3 days. So surfing, swimming, snorkeling, all that good stuff. So I live in paradise. Literally, it is beautiful here. I didn't used to own property, though. Okay. Back in 2011, I had over $40,000 of debt, no property. I didn't know how I was going to turn my life around. And then by April 2016, I paid off all that debt. And I also improved our family's net worth by $500,000 and was making almost $500 a month in passive income, mostly from dividend stock investing. Okay, so today we're going to talk about stocks. And also quit my job. My last day was December 23rd, 2016. My last day working as a full-time job at a bank here in Hawaii, wonderful bank. And I ended up I changed to become a full-time mother. Yeah, full-time mother, wife, homemaker, part-time finance freedom coach. I created Finance Freedom Mastermind program where coach clients and do what I did, which is pay off debt, but more importantly, increase passive income so that you can have more free time in your life and create financial freedom. Yeah. And improve your net worth all at the same time. And there's masterminds. We meet weekly. You can see more about my programs at yesfinanciallyfree.com and then go to the products page. Okay. All right. So today we're talking about how to set exit strategies for stock trading. And what is an exit strategy? It's when you go into a stock trade and you do an investment, and you can have exit strategies for any investment. Good day, Sadat. Welcome to the live. So any investment can have an exit strategy, and you really should have one, because the reason you need an exit strategy, and this is from personal experience, okay? I have gone into stock investments, right, for dividends. And I've had the dividends get cut and the stock go down in value. Dividends get cut, stock go down in value. I've kept the stock for years. And the stock is like, it's a loser. It just keeps doing that every year. And I keep holding on to it, hoping that it will get better. Because I did not set an exit strategy. So an exit strategy is where you cap your loss. You're like, or lock in your gain or cap your loss. Okay, so what does that mean? Like, if you get into a stock, and if you're holding it like me for dividends, or if you're doing it for a quick gain, like you're a day trader or something or whatever, or if it's just an investment that's long-term or short-term investment, it's good to have an exit strategy, because that investment can turn into a loss, right? Like right now we have an Airbnb business down the road. Right now it is losing money because the tourist industry is not functioning like it normally does in Hawaii, right? Because we're in lockdown, and tourists, anyone who comes here is not living, anyone who comes into Hawaii has to quarantine for 2 weeks. So that basically eliminates most tourists from visiting Hawaii, right? So, we're losing money. Do we sell the property and the business? That is an exit strategy, right? And I did not actually set an exit strategy for that Airbnb property. And a lot of our trades that we have stocks in, I did not set exit strategies. So I'm actually very interested in learning more about exit strategies. To be an effective investor, you need to know exit strategies. So now that we're talking, let's begin. All right. So I'm excited to learn more about exit strategies, which is why I'm blogging about it. So I am definitely interested. So I'm going to talk to you about what's on Fidelity's website. And in my blog, I have a link to this article I'm just going to talk about today. So why should you have an exit strategy, right? Now, successful traders know that their greatest enemy can be their own minds. Often emotions and loss aversion can get in the way of making good trading decisions. Like I said, it happens to me all the time. That's why it's so important that you have a plan for getting out of an investment. And it's that simple. So here's some questions they say that you should ask yourself before you trade. How long do you intend to be in the investment? What will you be using to measure performance? How will you know when it's time to get out? How will you know when it's time to get out? See, this is something that we all need to evaluate when we invest. Having an exit strategy is essential in managing your portfolio because it can help you take your profits, stop your losses. Exit strategies are important whether you're an active trader or a passive investor. And as I said, any kind of investing, you need exit strategy. 4 common ways to build a sound exit strategy. All right. These are things that they recommend. All right. 4 common ways. And this is for trading, stock trading. So they have this support and resistance. This is a very technical thing. Okay. So this is a technical indicator for day traders. Right? I'm not really a day trader, so I don't really use this indicator, but I'm going to tell you about it. And I know about it. I've heard about it. So basically, support occurs when a security bounces off a series of lows in price. So you have like the price of stocks go up and down. Yeah. So sometimes they'll go down, they'll go up. And if it keeps going down, but hitting this one price and then bouncing back up, they call that a support. Like it doesn't go below this one price. It'll go up, down, hit that, go back up. They call that support. So they say you might figure out what the support is, and then maybe you want to exit this, you want to sell your stocks when you break through the support, you go below the support. Okay. Or it's a good time to maybe think about getting out and just taking your profits. Okay. You can set profit loss targets from a purchase price. For example, a rule could be 2 to 1, all right, or 3 to 1 profit loss target. So if you double your money, you're automatically out. Or if you triple your money, you're automatically sell and then you lock in your profit. You could set that in advance for stock trades. For housing, it's a little trickier, but you can do that. You can be like, okay, when the money I put in the housing investment, if I sell and I double my money, I'm going to sell. You could set that target. You could totally do that and lock in your profit. You can do that too. Profit loss, right? If you're losing money every month and it exceeds a certain number of months, you might be like, okay, that's when I sell, right? Or if it exceeds a certain number of dollars, that's when I sell. So there's a lot of different ways to look at it, yeah? The 1% rule provides a general rule of thumb that says investors should set their max loss at 1% of their net worth. Okay, maximum loss. So this is a 1% rule. If your net worth, let's say you have $50,000 in savings, 1% of $50,000 is $500. So in any investment you make, do not allow yourself to lose any more than $500. So that would be, if you're in a stock trade, you would set your sell to be at $500 loss or less, but you don't want to max out past 500 if your net worth is 50,000. Okay, so that's a general rule of thumb that investors set. So max loss, and that's in all investments. So you don't want provides a general thumb that, for example, okay, set their maximum loss. Yeah, max loss. Defines the maximum time you plan on being exposed to a particular investment is the time exit strategy. So maybe you only want to be in there for a certain amount of time. Once you've arrived at that time, what you do once you've arrived at that time is up to you. But most traders use their time exit signal as an indicator that they should, at the very least, reevaluate their investment. Okay, so maybe once a year, once a month. I look at our investments on a monthly basis. Doesn't mean that I'm going to exit on a month, but I do look at them once a month. And if they're not performing, I have been selling some investments that are not performing. So I have exited some investments. I used to not exit any ever, but I have started exiting. So time exit strategies can't work when the security moves sideways for an extended period of time, when prices are moving against you, but not enough to trigger a stop loss, or when it's moving up too slowly for your liking. Okay. Using orders to set your exit strategy. There's many different methods to exit an investment. Here are some ways to do it if you're doing stock trading. Okay, you can do a market order. And that's the fastest. You're just selling right now. The market, if the market's open or not, you're just selling or buying. Okay. You're definitely going to buy or sell, but the price you're going to sell at is not guaranteed because it's the price at whatever the market is. If the market is open, it'll be whatever, as soon as your order goes through, whatever that price is in the market will be your price, right? If the market is not open, it'll be the price when the market opens. So market orders, you'll definitely buy, definitely sell, just not sure the price. A limit order is you set a price target. Like I want to buy at this price or I want to sell at this price. And if it hits that target, you will buy or sell. But if it doesn't hit the target, you will not buy or sell. So you're not guaranteed to buy or sell, but you're guaranteed of the price. If, it might never be reached, but that is guaranteed. Stop loss order. See, this one I'm not as familiar with. Allows you to place a target price on the downside that you wish to sell at. When that price hits, your order converts to a market order and you'll trade at the next available price. Beware, stop orders will not protect you from sudden price drops known as gaps. Interesting. Okay, so that one is different. That one just says that when you hit a certain price, your order converts to a market order. So it's not like a limit order. It's more like it's interesting actually. Okay. Stop limit order acts very similar to a stop loss. It's different in that it sends a limit order rather than a market order to execute your trade. Because a limit order sets the lowest price you're willing to sell at, price gaps become easier to avoid. But remember, execution on limit orders is not guaranteed. So there is a chance the security may never reach your limit price and you may never sell it. Interesting. Conditional order, placing one cancels the other order, or when what is also commonly referred to as a bracket order, allows you to have both a limit order and a stop order open at the same time. This allows you to lock in your potential profits and limit your losses all with one order. There's even a way to use conditional orders to set your bracket before you enter the trade. This is known as a one triggers, a one cancels the other order. These may sound complicated, but Fidelity has a tool called Trade Armo that makes this. So you can talk to your own brokerage company to talk about that. So they have different types of orders you can do too. If you're not ready to place an actual order to plan your exit, at least consider setting a price trigger alert. Those are something you can do, price trigger alerts, or making a note to document your strategy. Planning your exit is one of the most critical parts of due diligence on an investment. A sound exit strategy can help you take profits, minimize your risk, control your emotions. Who doesn't like taking profits? So that's from Fidelity. I hope you enjoyed today's blog. Please check it out at yesfinanciallyfree.com. Subscribe to the YouTube channel. And if you're on the Facebook fan page, like the page and share it with your friends and followers. I'll see you guys again tomorrow, same time. Aloha, take care.